the housing market, a ticking time bomb, or a misunderstood beast? Welcome to our exploration into the intricate and volatile world of real estate. Today, we're focusing on a subject that has been making headlines and stirring debates far and wide: the possibility of a housing market crash. Renowned experts in the field have been making predictions that hint at a looming catastrophe. They've been drawing lines, connecting dots, and painting a picture that seems to signal an imminent collapse. Let's take a moment to understand why. High levels of debt are at the forefront of these predictions. With homeowners and investors alike taking on larger and larger mortgages, the burden of debt is growing. The question is, how sustainable is this in the long run? Can we continue to pile on debt without facing a severe backlash? Then there's the issue of stagnant wages. While the price tags on homes are shooting up, wages seem to be stuck in a rut. This widening gap between earnings and house prices is causing many to question the stability of the market. Can we keep up with escalating prices when our incomes aren't keeping pace? And let's not forget about the oversupply of housing. In certain markets, we're seeing more houses than there are people to live in them. This surplus could potentially trigger a decline in prices, leading to a crash. But is this a universal phenomenon, or is it restricted to specific regions? These are just some of the factors that experts are pointing to when they talk about a potential housing market crash. They paint a picture of a market that's teetering on the edge, like a ticking time bomb waiting to explode. But is there more to this story? Let's dive deeper. This is just the tip of the iceberg. The housing market is a complex beast influenced by a multitude of factors. So as we venture further into this discussion, let's keep an open mind and remember, things aren't always as they seem. To understand the future, we must first decode the predictions. As we delve into the labyrinth of expert opinions, we are met with a chorus of concern. A key theme among these forecasts is the rapid, almost meteoric rise of home prices. This exponential growth is viewed by some as a red flag signaling unsustainable market conditions. As prices skyrocket, it's not just the cost of homes that's rising, but the size of mortgages as well. Home buyers, in a bid to keep up with escalating prices, are compelled to take on larger mortgages. Now, this may not seem like an issue when interest rates are rock bottom, but what happens when the tide turns and rates begin to rise? The fear is that an increase in interest rates could lead to a wave of mortgage defaults, similar to the domino effect we witnessed during the financial crisis of 2008. The experts also point to another trend: the growing number of homes being purchased as investments rather than for living. This shift from homeowner-driven demand to speculator-driven demand adds an element of instability to the market. Speculators, unlike homeowners, can quickly exit the market if conditions change, potentially leading to a sudden drop in demand and a subsequent crash in prices. Yet, these predictions are not solely based on speculation or gut feeling. They're grounded in historical patterns, economic indicators, and careful analysis of market trends. By decoding these predictions, we're not just listening to the experts, we're understanding the rationale behind their forecasts. But as we unravel these predictions, we encounter another perspective. While some experts are sounding alarm bells, others are striking a more optimistic chord. Could there be a silver lining to these dark clouds? Do these predictions tell the full story, or is there more to the tale of the housing market's future? As we unravel these predictions, we encounter another perspective. Scene script. Not all agree on a looming catastrophe. Let's hear the optimists. It's easy to be drawn into the drama of doomsday predictions, but let's take a moment to bring in a fresh perspective. We have with us experts who are optimistic about the future of the housing market. They see not a crash, but rather potential adjustments on the horizon. Expert 4 shares, it's all about perspective. Yes, there are challenges in the market, but let's not forget the strength of the fundamentals. We have a robust economy, low unemployment, and a steady demand for housing. These are factors that can cushion us against a severe crash. He further explains, sure, prices are high and affordability is a concern, but we must acknowledge the supply-demand dynamics at play. There is still a significant shortage of housing, and this shortage is what's driving up prices. It's basic economics. Expert 5 takes a slightly different approach. She highlights the adaptability of the market, saying, "The housing market is like a living organism. It adjusts and adapts to changes. Yes, we might see some cooling off in certain regions, but to label it as a crash is an overstatement." She continues, "Many are quick to compare the current situation to the housing bubble of 2008. But we must remember, the financial landscape has considerably changed since then. The lending standards are stricter, the economic conditions are different, and the regulatory environment is much more stringent." Expert 6, meanwhile, emphasizes the resilience of the housing market. Real estate has always been a cyclical industry. It has its ups and downs, but even in the face of downturns, it has shown remarkable resilience. Long-term trends indicate growth and stability. In essence, these optimists point towards the inherent strength, adaptability, and resilience of the housing market. They believe that while certain adjustments and regional fluctuations may occur, the overall direction is upward and forward. While the optimists paint a rosier picture, there are those who sit in the middle ground. In the middle ground, we find a more balanced perspective. Here we encounter experts who navigate the sea of varying opinions with a level-headed approach. While they acknowledge the signs of change, they stop short of sounding the alarm for a full-blown housing market crash. Instead, they advocate for a careful examination of the wider context. These experts point out that the housing market is not an isolated entity. It's a complex system that interacts with numerous other factors, including economic indicators and policy changes. They remind us that the market is dynamic, and while shifts may occur, they do not automatically signal disaster. For instance, some experts view the recent surge in home prices as a response to the low interest rate environment. They argue that as interest rates inevitably rise, we could see a slowdown in price growth, but not necessarily a crash. Others highlight the impact of government policies on the housing market. They point out that measures such as tax incentives for home buyers or regulations on speculative buying can significantly influence market trends. Therefore, any prediction about the future of the housing market must also consider potential policy changes. Then there are those who draw our attention to broader economic indicators. Unemployment rates, wage growth, and economic stability all play a role in determining the health of the housing market. These experts believe that as long as the overall economy remains strong, the housing market will weather the storm. The middle ground experts provide a sobering counterpoint to the extremes. They remind us that while the housing market may face challenges, it is also equipped with mechanisms for adjustment and recovery. They caution against panic and encourage us to view changes in the market as part of a larger, more complex picture. With such diverse opinions, how do we make sense of it all? Understanding the housing market requires us to consider all these perspectives, analyze the evidence, and draw our own informed conclusions. Stay with us as we continue to explore this fascinating topic in the next segment. Weighing the evidence, we find ourselves at a crossroads. On one hand, we have experts who foresee a housing market crash, fueled by high levels of debt, stagnant wages, and an oversupply of properties. They warn of the unsustainability of skyrocketing home prices and the potential for a wave of defaults when interest rates rise. The concern is further compounded by the increasing number of homes being purchased purely for investment purposes, a speculative demand that could collapse at a moment's notice. On the other hand, we have the optimists who believe that while the market might experience some adjustments, a full-on crash is unlikely. They argue that the real estate market is fundamentally strong, underpinned by a robust economy and steady demand. In between these two extremes, there are those who advocate for a more moderate view, emphasizing the cyclical nature of real estate and the potential for market corrections rather than a catastrophic crash. As we traverse this complex landscape of differing opinions, it's important to remember that the future of the housing market, like any economic entity, is inherently uncertain and influenced by a multitude of factors. While these expert insights provide invaluable perspectives, they are not infallible predictions. So how does one navigate this sea of information? It's about taking these insights and interpreting them in the context of your own circumstances, goals, and risk tolerance. If you're considering real estate investments, it's crucial to stay informed, understand the risks involved, and make decisions that align with your personal financial strategy. Remember, despite the differing viewpoints, all experts agree on one thing: the importance of due diligence. Understanding market trends, assessing the impact of economic indicators, and keeping a pulse on policy changes can help you make informed decisions about your real estate investments. As we reach the end of our journey, we leave you with one final thought. The final verdict lies in the hands of time and the ever-changing market dynamics. We've heard from a range of experts, each with their unique perspectives and insights. Their predictions, fueled by data and years of experience, have given us much to ponder. On one side of the debate, we have the alarmists, warning us of a looming catastrophe. They point to high levels of debt, stagnant wages, and an oversupply of housing. They caution us about the rapid increase in home prices, which they deem unsustainable, and the potential wave of defaults when interest rates inevitably rise. They also voice concern over the growing number of homes being purchased as investments, warning that this speculator-driven demand could collapse at any moment. On the other side, we've heard from the optimists, who envision a different scenario. They acknowledge that the housing market might experience some adjustments, but staunchly dismiss the idea of a crash. They see these adjustments as normal fluctuations in a robust market. In the middle ground, we find those who believe the housing market is neither on the brink of disaster nor invincible. They view the market as a complex entity, influenced by a variety of factors, and caution against oversimplification. What does all this mean for you? It means you're equipped with a wealth of perspectives to consider. You have the insights, the data, and the theories, and now it's up to you to form your own conclusions. Remember, investing in real estate, like any investment, carries risks and rewards. It requires careful analysis, foresight, and occasionally a leap of faith. So keep your eyes on the market trends, stay updated with policy changes, and don't shy away from asking the hard questions. Whether we're heading for a crash or not, one thing is clear: the housing market remains a fascinating and complex entity to watch.